It's a great pleasure for me to be joining you today at this Impact Investing and Business Forum event to talk about the role of impact investment in Brazil's recovery from the COVID crisis. We live at a historic time. The challenges created by COVID are unlike those that we have had to meet in recent years. The most recent parallel is probably the Great Depression in the 30s. And we find ourselves in a situation today where governments are going to emerge from the crisis with hugely increased debt, reduced budgets, and heightened social issues. And the question, therefore, is where can government find the resources to deal with the increased unemployment, the homelessness, and all the other issues that arise out of greater poverty. We live at a historic time from another perspective, however, a positive one, where the change in values among young people who refuse to work or to purchase the products of companies that are polluting our environment or creating social issues has not been lost on investors who are now channeling $40 to $70 trillion, half or more of all professionally managed assets in the whole world, to achieve more than just profit, to achieve impact on people and planet. This major force meets two other major forces. The second is the force of technology, which has taken new leaps forward now, that enable us to deliver impact in ways that humanity could never contemplate before. Impact through artificial intelligence, machine learning, augmented reality, and the convergence of computing and the human genome. And the third force is this technology's ability to enable us to measure the impacts of companies, the impacts that companies create through their operations, through their employment, and through their products on people and the environment, and to express them in dollar or other currencies. If you look at the implications of these three forces coming together, they presage an impact revolution, which is going to be as widespread and fundamental in the changes that it brings to the way businesses and investors operate as the tech revolution which has preceded it. We can witness a shift of paradigm from risk return without any concern about the consequences on people and planet, and now risk return and impact, where the companies which inflict the damage on our environment or on our populations are shunned by investors. We see the evidence of this paradigm shift in the shareholder rebellion at the recent Procter & Gamble meeting, where 2/3 of investors voted against management because of the deforestation which Procter & Gamble's use of palm oil occasions. We see it in ExxonMobil's shareholder meeting, where 5 directors are replaced. And we see it in the judgment of just a couple of days ago against Shell, saying that Shell has a duty of care for the environment. This paradigm shift is being translated into capital flows that can be helpful to Brazil and all other countries. We see private equity and venture capital now bringing impact into their models. We see the bond market already reaching $1.5 trillion of green, social, and sustainable bonds. We see companies like Novartis issuing 1.8 billion euros worth of pay for success bonds. where the interest rate that Novartis has to pay falls if its products reach vulnerable populations. We see Enel, the electric utility, issuing $7 billion worth of pay for success bonds, where its interest rate falls if it achieves targeted environmental objectives. And we see our equity markets now searching for better measures of the impact of companies so that we can compare corporate impact in a similar way to their profits. I don't think it is ridiculous to anticipate that the $30 trillion shortfall in achieving our SDG goals can be plugged by this impact investment. You can imagine the bond market going to 10% of its flows directed at achieving impact in the way that I have described. And perhaps most importantly, we can see public companies publishing impact-weighted accounts that reflect not just their profitability, but their profitability after all the impacts, positive and negative, which they have created. And to give you a peep into the future, I want to take you to an initiative at Harvard Business School, which I am privileged to chair, called the Impact Weighted Accounts Initiative. We have published to date the impacts of 1,800 companies from their operations on the environment. If I tell you that 250 of these public companies taken internationally create $3 trillion of environmental damage a year, that 250 of them create more damage each year than they create profit, that 600 of them create environmental damage equal to 25% of their profit. You can begin to understand how we will be evaluating companies in the future. Because alongside this environmental impact, we will soon be publishing several thousand companies' employment impact just in the course of the next few weeks, and then several hundred companies' product impacts across 10 different sectors, showing that we are capable today of expressing in monetary terms the impacts of companies, enabling us to compare their environmental and their social impacts and their profits. Now, the implications of this are vast. That our $100 trillion in equity markets begins to achieve real, measurable, positive impact, shifting our system from one which created problems in the search for profit to one where the search for profit brings solutions to our big challenges. The Harvard data also provides a very valuable additional insight that the level of pollution of a company reduces its stock market valuation relative to its competitors. The implications of this are also vast, because if impact information has become price sensitive, our regulators have to step in to ensure that the information that is made available to investors is provided on a comparable basis and at the same moment to every investor. And that's why you see today IOSCO, which groups the world's regulators, looking at the issue of impact transparency. That's why you see IFRS Foundation, which is responsible for accounting, financial accounting, across the whole world, aside from the United States, considering the establishment of a Sustainable Accounting Standards Board to provide this transparency. And that's why you see the Biden administration and the EU taking steps now in the direction of impact transparency. The message for Brazil is that it provides us with an opportunity today to bring private sector, enterprise, and capital to the side of government in meeting our great social and environmental damages. And I hope that just as the crisis of 1929 precipitated transparency on the profits companies made, because at that time, each company picked its own accounting principles, and there were no auditors to verify the numbers. And the Roosevelt administration in 1933, only 4 years after the crash, introduced the first legislation to mandate the publication of financial accounts on the basis of generally accepted accounting principles, and imposed the use of auditors to verify this information. At the time, there were remonstrations in Congress that it would be impossible to create an accounting system which applied to every company irrespective of its size or of its sector. And if it were possible, that this would spell the end of American capitalism. Well, with hindsight, we can see very clearly that this legislation, this transparency which it brought, laid the foundations for our massive investment markets. And today, after the COVID-19 crisis, governments have the opportunity to take a similarly bold step, and I hope the Brazilian government will take it, to bring transparency to the impacts of companies, so that they are able to help us surmount the challenges of the COVID pandemic.